Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, November 22nd. If you enjoy this type of content, please subscribe on YouTube and follow wherever you listen to podcasts. Today, the markets were slightly higher. The S&P 500 was up 1.36%, as was the NASDAQ, and the Dow Jones was up 1.18%. And usually we do see a little bit of a rally around Thanksgiving. Usually this week and the week after are two of the best weeks in the stock market. Today was an up day. I wouldn't put all my money on a rally continuing as we've been in this bear market, but history would say that the next couple of trading days are usually good. U.S. stocks moved sharply higher Tuesday, with gains accelerating into the final hour of trading after a mostly uneventful pre-Thanksgiving session. Federal Reserve Bank of Cleveland President Loretta Mester said Tuesday that restoring price stability remains top priority for herself and other members of the Federal Open Market Committee, which sets monetary policy. We're committed to using our tools to put inflation on a sustainable downward trajectory to 2%, she said, in an event hosted by her bank. Mester's comments come one day after Federal Reserve Bank of San Francisco President Mary Daly Monday said officials may lift the U.S. central bank's key policy rate above 5% if inflation does not ease. Daly also noted that writing off a 75 basis point hike in December is premature and nothing is off the table. I think that's interesting. I've kind of been saying that I almost expect a 75 basis point rate hike to come in December. I think that's a mistake, but I think that's what they're going to do. And I don't think the market has priced that in. I think the stock market is expecting a 50 basis point hike. And we've already seen, even when the market is expecting a 75 basis point hike, the day of these FOMC meetings, the market usually tanks. So if they're expecting 50 basis points and get 75, I think it could get ugly at the next FOMC meeting. In commodities markets, oil paired Monday's losses after plunging to January lows on fears that fresh lockdowns in China and reported output increase by Saudi Arabia and OPEC may weigh on demand. Energy Minister Prince Abdulaziz bin Salman has since refuted the prospect of an increase in production, helping oil climb back from declines. West Texas Intermediate crude futures rose to around $81 a barrel after hitting $75 a barrel on Monday. And then it goes into some individual stocks, but I'm going to skip over this. A steep climb in COVID cases across China has set off a wave of new restrictions for the world's largest economy just weeks after investors cheered the end of aggressive lockdowns in the country. The specter of COVID is still hovering over the Chinese economy, threatening to cause fresh snarl-ups for supply chains and demand for goods. Susanna Streeter, senior investment and markets analyst at Hargreaves Lansdowne, said in a note on Tuesday. The S&P 500 has started the holiday-shortened Thanksgiving week lower compared to previous years, according to data from Bespoke Investment Group. The Monday of Thanksgiving week has historically seen the index trade slightly lower, with a decline of 0.01%. In years when the index has been down 10% year-to-date or more, like in 2022, performance has been more positive, with an average 0.37% gain. So we could see some more gains, I think, around the holiday season. But the thing is we're approaching this 200-day moving average now in the S&P 500. We're only a couple percent away. Right now, the 200-day moving average is at 4,062, and we're sitting at 4,003 on the S&P 500. So that is extremely interesting. We haven't touched that moving average since June 16th, and the day that we touched that was the highest this market has been since that day. So that's really interesting. In addition to that, we have the trend line not far after that. That trend line's at about 4,094. and declining every single day. Um, so some interesting levels here. There's a little bit of room to go higher, but not really, in my opinion. I still don't know if we break through this 200-day moving average, and if we do, I'm not convinced. Even with the FOMC meeting coming up in December, I think that's going to be an extremely negative event for the markets. I don't know. Maybe I'm wrong, but this 200-day moving average, I would expect to be a huge, huge level of resistance. So that's what I'm looking at on the S&P 500. A little bit of room here, but to me, not really. I mean, this is an extremely bullish trend that we're in right now, but this level right here is gonna pose some challenges, I think. Bitcoin kind of followed the stock market today. It was up, bouncing off this 15.6 level. I still expect to see Bitcoin move lower. Um, I think the general direction of this asset is down, and I think we'll continue to see that. Um, and again, if it gets into this area, that's a zone that I like to pick it up at. Um, and the way I'm kind of playing this market, because obviously I'm long. I'm not selling any of my investments, even though I think that this market is probably going to turn around to the downside. I've been swing trading SQQQ and TQQQ respectively. SQQQ is um, it's a leveraged inverse ETF for the Nasdaq. So if the Nasdaq's down 1%, that ETF's up around 3%. And I'll buy that for anywhere between 3 to 7 days, and get some gains out of that. I've been going in and out of that ETF, and then also TQQQ as well, which is just a leveraged Nasdaq. So if the Nasdaq's up 1%, it's up about 1%, and vice versa. So those are some tools to use in your trading account. Easy, you can just buy and sell those. And trade them. That's kind of what I've been doing. I've been able to make some good gains off of that, even though the market's been moving down. So that's how you can still generate some return. Obviously, there's a bunch of other ways you can do that with options and stuff, which I kind of do as well, but not that's not really for this type of episode. But that's kind of how I'm treating this market right now. So I'll leave it here. I do appreciate everyone watching or listening to this episode. I'll see you tomorrow. And yeah, really interesting market right now. There's some room, but we're approaching some levels where I think it could get interesting. So until next time, I appreciate you listening to this episode, and I'll see you tomorrow.